Hi guys, it's Thomas here from COTbase.com. Welcome to our weekly COT review. Today we're going to be analyzing the 15th Commitments of Traders Report of 2022. And as we always do, we shall start off by looking at the largest changes in commercials positions. Before we jump to the review, just a brief reminder for those of you who are new to COT analysis. Here at COTbase.com, you'll find a lot of educational material, not only in written format, but we have some very useful videos as well. These videos will guide you through the analysis process, explaining to you step by step how you can benefit from this really amazing information. So back to the review, and starting off with our first market, sugar, where you can see we have a 25% change in commercials net positions. This is based on a 52-week look back period. So on the chart, of course, we have the commercials represented with the red line. There you have that large change. It is a bearish COT change signal suggesting weakness in the next few days. I usually like to get these COT change signals in the opposite direction where the week ended. So you can see starting on Wednesday, we've been witnessing a bit of a decline. So the signal itself could be a little bit late for us to act upon, but no worries. Let's move on and have a look at the COT Extreme situations, which, as you can see, especially with this sudden larger change in traders' positions, has reached a bearish extreme that is pretty significant. So you can see on this 5 years chart that there's not too many places in time when traders were at such bearish extreme levels. It can easily grow to an even greater extreme, no question about that, but the level of extreme that we have suggests that we should be being prepared for weaker prices to come in the medium to long run. The emphasis is on the medium and long run because, as you may see from October of 2020, we have had a bearish extreme throughout the period where sugar was actually in rally mode, right? So you got to be cautious. This does not mean that we should suddenly expect the market to crash, but it does suggest that there is a bearish extreme, which draws caution to the how long you should be expecting this market to go higher. I can imagine a bearish extreme where commercials are, let's say, net 600,000 contracts net short, and large speculators around 400,000 contracts net long, and let's say small speculators around 100,000 contracts net long. And of course, by the time we reach those extreme levels, I wouldn't be surprised to see sugar at all-time highs. So when I say there's a bearish extreme in the market, one should be looking at that as a stress level that could be there for many months or possibly years before there's a major reaction from the market. Copper is our next market, 24% change. This time we are talking about a bullish COT change signal. This, of course, is measured in commercials net positions. There you go. You can see the magnitude of that change being larger than average, but nothing exceptionally out of the ordinary, suggesting some further strengthening in this market. Moving on to the 5 years chart, you can see that we are a little bit closer to bearish extreme levels, but nothing big, really. You got to try to focus on the vertical line here. You can see that we had much greater bullish extremes and much greater bearish extremes as well. So more or less in between the two. We had a bearish extreme in February of 2021. You can see to no effect, but we do not have a significant bullish extreme either. So one should look at other markets that correlate with the specific market that you analyze. This is a general thumb of rule. So you might want to look at the metals sector overall to get a bit of more understanding what copper may do in the future. Or in case of copper, you may want to look at the stock indexes, for example. There is some correlation over there as well. So lumber will be the next market, 21% change over here in commercials net positions. And of course, jumping to the 1 year's chart, there you go. It is definitely much greater than average. Let's say top 10, 15 changes in this 1 year that we see. It is coming after a decline that's been going on for many weeks now. It is suggesting we could see a bit of a rise in the next few days that are coming. Now, the 5 years chart you can see is showing us more of a bullish extreme picture. So you got to go back to like 2018 to see significant bearish extremes. We did see greater bullish extremes, of course, just at the end of that year, 2018, beginning of 2019. We're not at those levels right now. It's just something worth to understand, especially if you trade this market, that the traders, the futures traders and options traders in this market are positioning themselves such that they still have a buying capacity left. So if this market is headed higher, that's absolutely something that you could expect to happen, but there is also space left to reach even larger bearish extremes. Moving on to large speculators COT Extreme analysis, we've got the South African Rand still on top of our list, 225 report extreme over here. If you've been following me in these weekly reviews, I don't think I can really tell you anything new. So for those of you just joining in, here we have a bearish COT extreme, and you can see the magnitude of that extreme, what it did to the market in the past. So it is a bearish extreme, suggesting some turn down in prices. Orange juice, another soft market for this review. How many softs do we have? Wow, a lot. 194 report extreme over here in large speculators net position. This puts the market in a major COT extreme. That means that for over 5 years, so more than 5 years, we have not seen an extreme as big as it is right now. Of course, we are not surprised, since orange juice is headed higher very dynamically since early part of this year. There is a big rise, so having these bearish extremes develop in these times is not surprising at all. To pinpoint exactly where the top is, of course, is impossible, even with the valuable data that the COT report is giving us, but it does suggest that we should brace ourselves for a top coming. And last but definitely not least, we have crude oil with 162 report extreme in large speculators positions. It is a little bit harder to see, but this is actually a bullish extreme in the market. The range is not that large. You can see we had the most bearish extreme back over here in January of 2018 and the most bullish COT extreme in January of 2019. Okay, so we're a bit closer to those bullish extreme levels, which simply tells us that even though we have been witnessing rises in the market, especially since the war in Ukraine has developed, we shouldn't be waiting for anything cooling down right now, at least based on the analysis we're doing on the COT reports. Now that was all for this review, but of course don't forget that here at COTbase.com there's so much to do in regard to COT analysis. The whole service is based around that. You can look at the newest COT report types, all the data types, so futures only or the options only, or if you want you can stick to the futures and options data type if you want. There's a bunch of data sets to analyze. You can dig deep in your analysis with all the tools that we have. You can look at specific markets, COT reports if you want to, and we do have some very useful indicators as well. The COT Base Pro, which is basically everything you see here in these reviews, but above that it gives you access to our database. You can download the data and you can use these tools in NinjaTrader as well. The iCOT intraday indicator, something newer that we developed for many years, is actually something very beneficial for those who trade in a shorter time frame. We use the concepts of COT analysis, but in the short time frame. So this chart that we have here, gold on a 1 minute candlestick chart, shows you that actually the concepts that you see in my reviews are put into place and they work in the near term, in the short term. So very valuable tool that I think could really help you figure out when to enter or exit trades. So, and it's very good to combine this with the long-term analysis that COT report analysis gives you. Thank you very much for being with me. I appreciate your attention. I wish you a wonderful weekend. Happy Easter. And I hope to see you in my next COT review. Take care. Goodbye.